When the entire world rushes to buy gold, why does Russia calmly sell? Think about this. In 2025 alone, global central banks snapped up over 760 tons of gold, a buying spree that stands among the most intense in modern history. China is stockpiling, Kazakhstan and India are following suit, and it seems like every nation on the map is scrambling for gold, trusting it as the last true safe haven. Against this backdrop, Russia stands out as the lone seller, moving against the crowd while everyone else hoards. Western headlines shout, "Russia sells gold reserves." Alarming voices warn, "Moscow is burning through its last defenses." The gold reserve isn't just a line item on the central bank's spreadsheet. It's a symbol, a psychological anchor when the world's foundations feel shaky. So when reports emerge that Russia is selling, it's only natural for nerves to rattle. But here's where it gets interesting. Is this panic or pure calculation? Is Russia desperately plugging budget holes? Or are they coolly locking in profits at record-high prices, while everyone else pays a premium, gripped by fear? Let's look at the numbers behind the headlines. Yes, Russia's gold reserves shrank a bit, from 75 million to 74.3 million troy ounces. That's less than a 1% drop. But in the same period, the value of what's left doubled, from $190 to $384 billion. In other words, they sold a sliver, but what remains is now worth almost twice as much. Meanwhile, other countries are buying up gold as if their future depends on it, motivated by the same sanctions and geopolitical shocks that forced Russia to rethink its reserves. If you misunderstand these moves, you risk missing the real story. The powerful shift in how nations are defending their economies, their currencies, and their security. So, is Russia's gold sale a sign of weakness or a masterstroke in adapting to a new world order? Let's step past the headlines and dive into the real numbers and the logic behind Russia's gold strategy. Are we witnessing the beginning of a Russian fiscal emergency, or is something else unfolding behind the headlines? Lately, global financial headlines have sounded the alarm. Russia is selling its gold reserves. For many, that conjures up images of a desperate government raiding the family vault to patch up a failing economy. Combine that with the fact that central banks all over the world are in a full-blown gold rush, scrambling to buy record amounts of bullion, treating gold as the last trustworthy anchor in a world of financial uncertainty, and you've got the perfect recipe for panic. Just look at the numbers. According to official reports, Russia's gold reserves dropped from 75 million to 74.3 million troy ounces in the past year. On the face of it, that's a reduction. But let's do the math. It's less than a 1% drop in physical holdings. Meanwhile, the real story isn't about how much gold Russia has lost, but how much that gold is now worth. The value of those reserves didn't just hold steady, it doubled. 3 years ago, Russia's gold was valued at around $190 billion. Today? $384 billion. That's a 94% increase, even though the physical stock barely changed. Zoom in further, and you'll see the same trend with Russia's National Wealth Fund. Over the last 4 months, their gold holdings dropped by nearly 19,000 kilograms, about a 10% decrease. The Russian Finance Ministry isn't hiding this. They're openly publishing these numbers. And they're not selling off gold in secret, nor are they flooding the market. What's happening is that gold has stopped being an untouchable emergency stash and is now being used, quite transparently, to cover budget shortfalls. Look closer, and it gets even more interesting. Russia stopped buying new gold for its reserves back in 2020. For nearly 4 years now, every ounce mined in Russia has either been exported or sold within the domestic market. The central stockpile isn't being topped up. It's only gradually drawn down. It's slow and measured, not a fire sale. What's driving all this? Some say it's a sign of weakness, proof that Russia faces growing fiscal pressure. And yes, the numbers show that money is needed right now, not next quarter or next year. The so-called budget rule, designed to keep spending in check, has been softened. Gold, it turns out, is the easiest, most reliable asset left for the Russian government to tap. But here's the kicker. While headlines focus on the sale or decline of Russian gold, they often miss the context. Russia has managed to turn a tiny physical sale into a massive financial windfall. By selling less than 1% of its gold at a time when prices are at historic highs, think $5,400 per troy ounce, a level analysts didn't even dare predict 3 years ago. They've realized more revenue from a small sale than they would have gotten from a much larger one before. In finance, that's called locking in profits, selling high, not because you have to, but because it's smart. And yet, for the public, the message is muddied by dramatic headlines. If you just accept the panic at face value, you risk completely misreading not only Russia's strategy, but also the much bigger shift happening in global finance. Remember, while Russia is monetizing its gold, other central banks are buying as if it's the last life raft in a storm. So, is this really a crisis, or is it clever asset management? Before we jump to conclusions, let's pause and listen to the critics, the ones raising the loudest alarms, and give their arguments a fair hearing. Is Russia burning through its last reserves, or cashing in at the perfect moment? That's the question behind all the alarmist headlines. But when you look past the panic, the real story isn't about desperation. It's about discipline, timing, and a shrewd read of global finance. Let's break down both sides of the narrative. Critics point to a shrinking pile of Russian gold, warning this is a sign Moscow's running out of options. They say Russia is forced to sell off precious reserves to plug gaping holes in its budget, that no new gold is being added, and this is just a stopgap before financial collapse. The numbers? Yes, Russia's official gold holdings have dipped, and yes, the finance ministry is selling gold and foreign currency in a systematic, near-daily process to cover budget needs. But that's only half the picture. Here's what those headlines aren't telling you. The value of Russia's gold reserves has nearly doubled in the past few years. While the physical tonnage might be down, the overall gold stash is now worth about $384 billion, almost half of Russia's $899 billion in official international reserves. The reason? Gold prices have soared to historic highs, over $5,400 per ounce. Russia isn't panic selling at a loss. It's monetizing its most secure asset, right when demand and prices are peaking globally. Professor Gordienko, a leading economist, puts it bluntly. This isn't a fire sale, it's asset management. Russia is selling gold not out of fear, but out of calculation, maximizing returns at the precise moment it makes sense. And crucially, Russia's gold isn't sitting in vaults overseas, vulnerable to freeze and seize moves like the infamous $300 billion in dollar and euro reserves that Western sanctions locked up overnight. This gold is physically in Russia, under Russian control, immune to outside interference. Now, contrast that with how the media covers similar moves elsewhere. Take Turkey, for example. When Turkey sells gold to prop up its currency during a crisis, the story is reported as pragmatic, even routine. But when Russia sells gold at record prices, the narrative flips to panic. Russia's cashing out. The coffers are empty. It's a classic double standard. Same strategy, very different spin. Let's also talk about supply. Unlike most countries stocking up on gold that they have to buy on the open market, Russia has its own mines. It produces gold domestically, processes it at home, and sells it abroad for top dollar. That means while China or India use their currency reserves to buy gold at those sky-high prices, Russia earns foreign currency by exporting its own. And the profit margin? Substantial. The difference between Russia's gold production costs and today's global sale price is pure gain for the Russian economy. Gold isn't just a static savings account buried in the ground. It's an active revenue stream. In fact, Russia has structured its reserve policy around what's actually available and secure. 60% yuan, 40% gold. The rest, either frozen or exposed to sanctions. Gold, once the untouchable rainy day fund, is now a strategic tool, liquid, sanction-proof, appreciating in value, and best of all, right there at home. Try freezing that. This isn't about selling off the family silver to survive. It's about turning a forced hand, a result of $300 billion in frozen reserves, into a business opportunity. The irony? The very sanctions designed to cripple Russia's financial stability ended up making gold its most profitable, secure asset. But here's why this story matters for you. If you buy into the panic narrative, you'll miss the real shifts happening in the global economy. Misreading these signals could lead you to overestimate economic risk, misjudge national stability, or misunderstand where true financial security lies. The global gold rush by central banks isn't just a Russian story. It's the world's reaction to new financial realities and changing trust in old currencies. So why did Russia have to sell its gold at all? The answer isn't just about balancing the budget. It's rooted in political upheaval, strategic adaptation, and a world where the rules of money are being rewritten. Let's dig into the seismic shifts that set this stage. What if the real trap wasn't for Russia, but for those who tried to weaponize the dollar? Back in 2022, the West froze $300 billion of Russian reserves with a single decision. Overnight, assets once thought to be safe became little more than numbers on someone else's ledger. Untouchable, inaccessible. That move sent shockwaves through global finance. Suddenly, the idea that dollar and euro reserves were sacrosanct lost its shine. If you could freeze Russia's money, what's to stop anyone else from losing theirs? That's when the real shift started. For Russia, the only reserves truly immune to sanctions were those held in gold and Chinese yuan. Gold, in particular, became more than a passive store of value. It turned into a working tool. It's liquid, universally accepted, held at home, and most importantly, completely outside the reach of Western financial controls. But the story doesn't stop at Russia's borders. Central banks worldwide, China, Kazakhstan, India, and many others, rushed to buy gold at a pace not seen in decades. According to the World Gold Council, central bank gold purchases hit levels that, just a decade ago, would have seemed unthinkable. Last year alone, over 800 metric tons changed hands, and that trend continued into 2024. This isn't a spike. This is the new normal. Why this sudden gold fever? It's not greed or speculation. It's fear. Fear that any country's reserves could be frozen with a click. It's a reaction to the signal sent by the sanctions. Your safe assets aren't safe if you fall out of favor. So, instead of relying on dollars or euros, the world's central banks are betting on gold, the one asset you can't freeze. And here's the irony. In trying to punish Russia, Western sanctions unleashed a global gold rush, eroding trust in the dollar and inadvertently making gold the new safety net. The dollar, once the bedrock of international finance, now carries a shadow of risk as a tool for political pressure. The message to the world was loud and clear. If it can happen to Russia, it can happen to anyone. Russia, meanwhile, finds itself in a uniquely strong position. Unlike most countries that have to buy gold at record prices, Russia is one of the world's largest gold producers. Its gold industry is fully integrated, from mining to export. So while other central banks scramble to buy, Russia sells both from its reserves and from newly mined stock, cashing in at historical highs. This isn't a desperate sale, it's a calculated export strategy. The proceeds provide real, liquid money that flows back into the Russian economy, strengthening financial resilience even as sanctions bite. Compare that to, say, Turkey, another country that's recently sold gold from its reserves. There, gold sales are a crisis measure, a last-ditch attempt to prop up a plunging currency. But the media coverage couldn't be more different. For Turkey, it's framed as prudent reserve management. For Russia, it's painted as a fire sale, a sign of collapse. Yet the numbers tell a different story. Russia's sales are a fraction of its reserves, timed at the peak of gold prices, and used to shore up the budget. Turkey's sales are far larger, forced by necessity, and driven by a currency in free fall. So, what's really happening here? We're witnessing a tectonic shift in world finance. The sanctions that were meant to isolate Russia have instead pushed countries everywhere to rethink their reserves, their currencies, and their trust in the entire global financial system. Central banks aren't just hedging, they're signaling that the age of unchallenged dollar dominance might be ending. If you miss this shift, if you only listen to the headlines, you risk misunderstanding the biggest changes in global economics in decades. The real story isn't about panic or collapse. It's about adaptation, strategy, and the new rules being written for the world economy. Now, with both sides of this gold story laid out and the bigger global context in focus, what practical lessons can we draw for today and for the future? How can you tell the difference between a real crisis and clever adaptation? Let's dig into how to read between the headlines and why it matters for you. First, let's face the facts. Pressure on Russia's budget is real. In just 4 months, the National Wealth Fund's gold holdings dropped by nearly 19,000 kilograms. No small figure. Buying gold for reserves has been on pause since 2020. Fiscal rules that were supposed to get tighter have been loosened instead. So, anyone claiming Russia's situation is smooth sailing just hasn't looked at the numbers. The challenges are undeniable. But now, let's look at the other side. Despite all the drama, the actual gold sold by the central bank was less than 1% of its total reserves, at a price that shattered records. The value of what's still left in Russia's vaults has doubled in just a few years, now accounting for nearly half of all the country's international reserves. Think about that. Almost $385 billion worth of gold, out of a total $900 billion in reserves. That's not a stockpile being liquidated in desperation. That's a fortress. They sold one brick at triple its price. Compare this with the crises of the 1990s, when Russia was forced to sell off gold reserves at low prices, draining its financial lifeline and taking humiliating loans from the IMF under tough conditions. That was a real fire sale, desperate, with no alternatives. Today, it's a totally different story. Russia sold a sliver of gold when prices hit an all-time high of $2,140 an ounce, levels nobody expected. They converted a peak in value into fresh budget liquidity, without borrowing abroad, without begging creditors, and without giving up any leverage. This is the crux. Russia's reserve policy has been overhauled since its assets were frozen in the West. Now, it's all about gold and the Chinese yuan, two assets that have either grown or held steady. The country isn't just sitting on its gold like some untouchable museum treasure. Instead, gold has become an active tool, supporting the budget and giving the economy breathing room. Export continues, mining keeps churning, and gold sales at record prices provide liquidity right when it's needed most. But as Professor Gordienko points out, this isn't risk-free. If budget pressures persist, more gold will have to be sold. Gold is now a working instrument of fiscal policy, not a dusty backup plan. So yes, caution is warranted for the long term. But as of right now, the strategy is clear, and it's working. So why the doom-filled headlines? Here's where media narratives come into play. Look at Turkey, for example. Their central bank sold gold to stop the lira from crashing, a textbook crisis move. Financial outlets covered it calmly, almost matter-of-factly. But when Russia sold a tiny fraction of its gold at the perfect moment, headlines screamed, fire sale, panic, collapse. Same action, two completely different stories. Why? It's not about economics, it's about the audience, the narrative, and let's be honest, the politics. The lesson is simple, but critical. Don't trust headlines at face value. Always look at the numbers, check the underlying facts, and ask what story is being sold, and to whom. Media bias isn't just a buzzword. In high-stakes geopolitics, it shapes public perception, influences markets, and can easily push you toward the wrong conclusion. For you, missing these nuances isn't just an academic mistake. It means risking your own financial perspective, falling for someone else's panic, and misunderstanding the real shifts in global power and security. Nations and individuals alike need to develop a sharper lens, one that sees past the headlines and into the logic behind the moves. So, after all this, what's the ultimate verdict, and what should you do with this new understanding? Let's break it down next. This isn't crisis. It's adaptation, and adaptation with profit. If you've followed the headlines, you've probably seen the dramatic stories. Russia is selling off its gold, disaster looms, fiscal panic is just around the corner. But as we've broken down today, the actual picture is far more complex and far more strategic than the fear-mongering would have you believe. Let's be clear. What's happening now isn't a forced fire sale like we saw in Russia's past, when reserves were dumped cheaply, from a place of desperation and with no alternatives. Back then, it was a financial surrender. Today's gold transactions are something else entirely. This is a calculated, market-driven decision. Russia is offloading gold at historic peak prices, turning an asset into much-needed liquidity, and doing so at a moment when the rest of the world is scrambling to buy. It's not a collapse. It's a hard, necessary adjustment, one that's actually working. And why is this possible? Because after $300 billion of reserves were frozen by the West, Russia rebuilt its financial safety net in just 3 years. The country shifted its reserves away from Western currencies, focusing on the Chinese yuan and, crucially, gold. Gold whose price has doubled since then. Gold that Russia continues to mine, refine, export, and, when it makes fiscal sense, sell. Every ounce sold at these record highs brings maximum return, plugging budget gaps without running to foreign lenders. Of course, it's not all smooth sailing. The pressures on Russia's budget are real and ongoing, and even respected economists are warning that if those pressures persist, gold sales may need to continue. It's a delicate balance. But for now, in this moment, Russia is seizing a window of opportunity while the global price is at its highest. That's not panic, that's pragmatic financial management. And here's the bigger twist. The very sanctions meant to punish Russia have turned gold into a central pillar of global finance. By freezing reserves, Western powers have forced central banks everywhere to rethink their trust in the dollar. The result? A worldwide rush into gold, with Russia, one of the world's top producers, perfectly positioned to benefit. The intended trap has become, ironically, an advantage. So what's the real risk here? It's not gold prices or sanctions. The real risk is letting yourself be steered by loud headlines instead of looking at the facts. In a world where the rules of economic security and trust are shifting by the day, understanding what's actually happening, beyond the stories crafted for someone else's agenda, isn't just wise, it's vital. This is what adaptation looks like. Uncomfortable, yes. Pressured, absolutely. But ultimately, resourceful and profitable. The world where the dollar was the unchallenged safe haven is gone, transformed not by an adversary, but by the choices of its own gatekeepers. Gold has become the new fallback, the new insurance policy, and Russia is using it to its advantage. So, is it time to keep selling, or to start stockpiling again? That's a debate each of us should follow closely and form our own opinions on. But if understanding how our money and our world really work matters to you, if you want facts over narratives, stay tuned. Here, we break it down. No scare tactics, just the real story.